This is Brad Wolff, and this is the end of day Emini review for August the 5th, 2022. As you can see, Al marked on the chart, we had a parabolic wedge by climax, then a triangle. And here is the parabolic wedge. Here was the triangle, these blue lines. And it's important to note on the open that this is unsustainable. We had, while the market, it was a lower probability that we would just sell off like this without testing up here. The problem the bulls had is here's two bull bars right here, then a pause, 2-bar pause, and then we had another breakout, and then a pause, and another push-up, pause. And it doesn't look that clear. It looks like it's a strong breakout, but there's not uniformity to the bars. This bar is really big, it's climactic, this breakout bar is smaller. We have overlapping bars, so we have a breakout, these 3 bars are overlapping, these bars are overlapping, we have another breakout, we have all these overlapping bars here. So it's stepping up. It's, breakout, pause, another breakout, pause, and there's the final push up. And while the bulls are happy to buy here, they're happy to buy above this bar, happy to buy above here, they're going to become worried about buying here or above these bars, because typically a climax or buy climax leads to sideways trading. And when you get frequent, when you get consecutive buy climaxes, it increases the probability of a pullback. So a lot of traders, they don't want to buy all the way up here. The strong bulls, they bought down here, they took profits up here. They want to wait for some sort of 10 bars and 2 legs before they buy again. And when they see these 2 big bear bars, they're going to think that's strong enough for a second leg down. The bulls that bought anywhere up here, they're disappointed. They're going to want to get out somewhere around here. And the remaining bulls would get out below this bar or this inside bar or the second entry here. And the bulls tried to form a second entry buy, but it was a bear bar. Then we had a wedge, but it was a doji. And then the market went outside down and broke below the wedge. And whenever you break below the wedge, you typically get 2 legs down. So breakout, pullback, second leg. And once you have the second leg down, the problem here is it's consecutive sell climaxes. So sell climax, another sell climax, sell climax, sell climax. And you're very close to the open of the day. And the market could easily reverse up just like it sold off here. So even though as strong as this bear bar was, the market quickly reversed up. And the bears tried several times to get back out at the low close, and they failed to do so. And we had a bear flag here. The bulls broke to the upside and got a couple legs up. But again, same problem here at the wedge. 1, 2, 3, or 1, 2, 3. It doesn't matter. It's again consecutive buy climaxes. We had a complex top here. We broke to the upside. We had another top. 1, 2, 3. So, and you're back in this upper sell zone up here. So this is resistance. It'll probably act as resistance again. And the market sold off once again and formed a wedge. 1, 2, 3, broke to the downside, and then rallied into the close. So lots of traps, lots of, you can call it second leg traps, you can call it wedge bottoms. It's a trading range day. That was a triangle. And as far as stop entries, you can see I'll mark these bars. They were closing on their highs. Here, we broke to the upside, pulled back, so it's a high 1 buy. Here, closing on high, closing on its high. It's a wedge. It's not an ideal short, but a lot of bulls would get out, which means bears will sell. Bears, better to wait to see what the reversal attempt will look like and sell the failure. So bulls tried to reverse these bear bars. They're failing, so bears sell below here. They sell below here. We had a wedge. We're breaking below the wedge. That's why that's marked. Here's the follow through. Sell below that. Sell below that. Even if you sold below here, most traders would probably get out above this bar or above here. Bull bar closing on its high. which means these are okay places to buy. Bulls can buy above this bar or even above this bar right here. This bar didn't trigger. And it's the same for any of these. Bull bars closing on their highs, the bulls will buy. And same for down here. So overall, in a trading range, it's important not to get hopeful. And when you have 3 legs up, be careful about buying. When you have 3 legs down, be careful about selling. And when in doubt, wait for the breakout below the entire range or the breakout above the entire range, or wait for a pullback.